All right, hope you all are having a fantastic day today. What you're about to watch is essentially a 30-minute masterclass on my personal bull thesis for CleanSpark. I've never been this optimistic and this confident in my investment in the 5 years that I've covered this company. I think the future is extremely bright, and I think there's some things that the markets are missing and aren't assigning any value to that, well, they're going to have no choice but to assign value to at some point in the future. And by identifying these things, we can beat Wall Street at its own game. We can beat the stock market at its own game, and we profit from that. It all stems from three main things. First and foremost, CleanSpark is set out to be the first and only Bitcoin mining company that is not actively diluting shareholders. They have no equity dilution program active currently because they truly believe the valuation of their company is too cheap to pull the equity lever to raise capital. That leads me to point number two. CleanSpark has more than 12,500 Bitcoin sitting on their balance sheet, and that's been able to open the door to optionality for non-dilutive financing. It also has led the company to be able to start to generate a yield on this HODL balance, and they're the only company in the space that is actively doing that as well. And any margin, any income they see from their HODL balance goes directly back to shareholders, not into a value-destructive activity like HPC and AI has been so far up to this point in time. That leads me to point number three. The company has achieved escape velocity, where they are able to cover all of their operating expenses at the company every single month with a portion of their Bitcoin production. And at the end of the day, they're still left with Bitcoin to add to their HODL stack. Obviously, as they continue to grow their operations and as the price of Bitcoin appreciates, it means they're going to have to sell a less and less portion of their monthly production to cover their expenses. And that's a very exciting future in my personal opinion. So get ready, strap in your seatbelt. This is going to be a 30-minute information-packed video. I'm assuming you're not going to agree with everything that I said in this video, but just remember, this is my thesis. My job is to communicate my thesis, my opinion on this company, my findings on this company to you guys, and you guys at the end of the day decide whether or not you hit the buy or sell button. Without further ado, if you're new here or returning not yet subscribed, please subscribe down below. It means the world to me. But let's go ahead and get into this. For starters, CleanSpark's having a pretty dang good day of trading. Most of the Bitcoin mining stocks are up today. CleanSpark in particular is up more than 5%. And actually, year to date, CleanSpark is the top performing Bitcoin mining stock in the entire stock market. This is something that I thought might happen just as the AI hype kind of has faded following the DeepSeek debacle. A lot of the other Bitcoin mining companies that have either paused their Bitcoin mining expansion or slowed down their growth in that business segment to focus on HPC AI, they received a massive premium from the markets last year, and CleanSpark kind of stuck to their guns, saying that they're a 100% pure play Bitcoin mining company, and they have zero interest in pursuing that HPC AI avenue, at least right now. So CleanSpark didn't really get that premium last year from the markets, but now all of a sudden that premium has started to fall off of the other companies, and CleanSpark is being rewarded for sticking to their guns. Bottom line, these other companies that have tried to pivot to HPC AI are kind of homeless companies. They have yet to generate any sort of value on the HPC AI front for shareholders, and all that's done is it's led to more dilution. That's one difference maker right now with CleanSpark, in my personal opinion, is they have come out and stated they have no immediate plans to use an ATM program at the moment. An ATM program is basically when a company chooses to go out and sell brand new shares of their company into the open markets to raise more funds, well, via equity sales. CleanSpark has zero interest in doing that right now at current valuations. That tells you that the management team believes their company is tremendously undervalued, and this is the case for CleanSpark and CleanSpark only. Every single other company in this space is actively diluting shareholders at current valuations, which is very dangerous and can be permanently damaging to shareholders when you're selling new shares into the markets at such low valuations. In fact, a lot of these other companies just in the last quarter diluted shareholders to the tune of basically $100 million in one single quarter. Some of these companies have $1 billion ATM programs that they are hitting hard and will be fully tapped out within the next 10 to 12 months. And after that, they're going to issue a brand new ATM of similar size, if not even bigger. Dilution never seems to end. I'll give a shout out to Iron right now, which is another Bitcoin mining company. At least on paper, their operations, their Bitcoin mining operations look tremendous. They look tremendous. They're creating value for shareholders via their Bitcoin mining operations, but they're turning around and putting all of that value creation into something that's creating no value at all for shareholders, at least to date in HPC and AI. So any sort of value creation that exists there on the Bitcoin mining side really doesn't matter. People aren't going to pay for that if you're just funneling it right into something else that isn't creating shareholder value. And that's kind of been the case with these Bitcoin mining companies that have tried to transition to HPC AI. They'll talk about the bright future, the excitement of HPC AI, and then behind your back, they're going to go out and sell $2 million worth of shares within 3 months. So a lot of these companies, I hate to say it, got into chasing the HPC AI hype simply because they need to raise more money and they need to hit an ATM. And it's kind of unfortunate, but again, kind of a long tangent there. That's something that we don't have to deal with right now by owning CleanSpark stock. And I think that's a lot of the reason this year, CleanSpark is the top performing company in the entire space. The management team themselves aren't fighting against you by selling new shares in the markets at such low valuations like they are in other companies. It makes a huge difference when valuations are low. Now, let's go ahead and focus on their quarterly report. Numbers came in basically as expected. I always say that with quarterly earnings reports for Bitcoin mining companies, they're never too much of a surprise because they give us monthly operational updates. They tell us every single month how many Bitcoin they mined. We generally know what the price of Bitcoin was at when they mined their Bitcoin. We generally know these companies' power costs, et cetera. So it's pretty easy to forecast numbers that companies are going to come in with. I'll highlight this when we get into the spreadsheet later in this video, but I was actually off on some of my numbers, and I was off in a good way. CleanSpark, common trend you'll notice is CleanSpark is trying to operate like the adult in the room. CleanSpark recently chose to transition their strategy, move their strategy into selling a portion of their monthly production to cover operating expenses. And at the end of the day, they've also achieved what they're calling escape velocity, where, they can sell Bitcoin to cover their monthly expenses, but they're still mining enough Bitcoin to continue to add to their whole balance. That's this escape velocity that basically no other company has achieved yet. In any company that might have achieved it, again, they're funneling all of that value creation back into something that hasn't generated any sort of value so far operationally. HPC AI. But during the quarter, CleanSpark had basically $182 million of revenue, up 62.5% from the prior year. Bitcoin production grew to 1,957 at an average revenue per coin of $92,811. They say they're still on track to reach their 50 exahash per second target during June, so that's coming up very, very soon. And beyond that, they really haven't given much guidance, and that's something that going into this earnings report I was looking for. I wanted CleanSpark to communicate what their plans were beyond this 50 exahash per second target for June. And they did that. They did just that. They told us that they have paid around $100 million towards additional infrastructure, supporting almost 200 megawatts. And they've also paid around $175 million of state-of-the-art mining rigs, which will equate to 7 exahash per second above and beyond this 50 exahash per second target. So they have the assets procured that they need to reach 57 exahash per second. So right now, that's going to kind of be my end of year target for CleanSpark. They got rid of they mostly got rid of their time-based guidance. And I think that's a great plan, especially in today's market where they're no longer bound by a time constraint. So, in the past, companies have said, well, we'll just use this as an example. They've said, we're going to reach 50 exahash per second by June. And well, that doesn't give them any leeway. So if they're getting close to June and they're behind on their exahash per second target, they might be incentivized to make an acquisition or merger that isn't accretive to shareholders just in order to reach this 50 exahash per second target. So getting rid of that time-guided guidance, time-based guidance, I'm actually a fan of that. I'm very confident the company's going to continue to grow, but they're going to be searching for just the best deals, quite frankly, from here on out. Now, moving to two very, very important, I guess, difference makers for CleanSpark. First, I want to focus on their line of credit agreement with Coinbase. They were able to sign a $200 million line of credit with Coinbase, which was just an expansion of their previous $50 million agreement or line of credit with Coinbase. They expanded that line of credit. They expanded that master loan agreement. And the only reason they were able to do that is because they have a HODL balance. And this gives the company the ability to raise money that they need to grow and pay monthly expenses without diluting shareholders. They can leverage Bitcoin they hold on their balance sheet, and then they can pay down this line of credit over time by selling a portion of their monthly production. This is a huge difference maker for CleanSpark because a lot of the other mining companies just simply don't have HODL balances, and they have no hope of building a HODL balance because they're funneling all of their Bitcoin mining proceeds again into HPC AI or other business ventures or business segments. This is a tremendous competitive advantage for CleanSpark, and it's a great advantage for CleanSpark shareholders. It's, again, something where the company is looking for other avenues, other levers that they can pull to raise funds when they need to raise funds in a hurry to make an accretive acquisition on behalf of shareholders. And they can do this now by drawing down a line of credit backed by Bitcoin rather than hitting an ATM for $200 million. And that's just one advantage of having a HODL balance. I'll discuss a couple more advantages that other companies just don't have access to that CleanSpark does here in a little bit. But I want to focus on this minor option exercise. I think this was a huge deal for CleanSpark, but also the industry. I think we're going to see a lot more of these sorts of deals get signed. I'm going to zoom in here so you guys can maybe read this a little bit better. But bottom line, CleanSpark exercised a previous option that they held to purchase an additional 13,200 mining rigs for approximately $76.5 million. However, the company was able to negotiate a very favorable payment arrangement with Bitmain, their supplier of Bitcoin mining rigs, where they were able to pay Bitmain using Bitcoin on their balance sheet. There's a couple advantages to this. One, instead of having to sell Bitcoin to raise the cash in order to give to Bitmain to pay for the Bitcoin mining rigs and having to pay taxes on that sale, they were able to just, give Bitmain the Bitcoin without having to pay that potential capital gains tax. On the other hand, the other advantage here was that they were able to pay in Bitcoin at a 15% conversion premium to spot price on the date of the transfer. This means that they transferred to Bitmain 691 Bitcoin with a total fair value of $66.5 million, basically $10 million less than the mining rigs were originally valued at or what they originally were contracted to be sold at. So CleanSpark saved money by saving on potential taxes, and they saved money by negotiating this very attractive payment arrangement with Bitmain. But it doesn't even stop there. The spot value of the Bitcoin they gave to Bitmain was $96,600 per Bitcoin at the time of transfer, but Bitmain applied a price because of that conversion premium of approximately $110,000 per Bitcoin. And they don't say it here, I don't believe, unless I scroll down. No, they don't mention it here, but CleanSpark actually received a free call option to repurchase this Bitcoin from Bitmain at some date in the fall for free. A free call option to repurchase this 691 Bitcoin if the price of Bitcoin rises to $110,000 or more. CleanSpark would definitely exercise this free call option if they can acquire Bitcoin that's worth $115,000 and turn around and sell it for $110,000. That's immediate profit going to the bottom line of shareholders. Another potential advantage of this deal. And worst case scenario, if the price of Bitcoin doesn't rise to $110,000 by the expiration date, CleanSpark still saved $10 million on this purchase. And they still more than offset any impact that tariffs might have had on these mining rigs. So all in all, it's a win-win scenario for shareholders. And I hope moving forward that CleanSpark can negotiate more deals like this. At this point in time, CleanSpark is Bitmain's largest customer by far. And actually, a lot of these other companies and entities diverting resources away from buying ASICs, away from Bitcoin mining rigs and into HPC AI it's going to put a lid on the price of mining rigs moving forward, which makes CleanSpark's growth easier by sticking with what they're really, really good at. Now, let's go ahead and peel back another layer of the onion here, because it keeps getting better. It stacks on top of itself. And again, it's something the markets really aren't assigning a lot of value to now, but over time, they'll have no choice but to assign value to this, which I think obviously will benefit shareholders long-term tremendously. So during the month of April, this was the first month where CleanSpark opted to start selling a portion of their Bitcoin production to pay for the operating expenses of the company. So we can use this math. They produced 633 Bitcoin in the month of April, and they sold basically 400 Bitcoin during the month of April to pay for all of their expenses. Now, there was an analyst in the earnings call that asked for clarification on this. Basically, if $35 million is a good forecast for monthly operating expenses for CleanSpark moving forward. If you do the math, they sold 400 Bitcoin in the month of April, and that was worth roughly $35 million. Gregory Lewis asked the question here, and Gary Vecchiarelli, the CFO, said basically that yes, $35 million, give or take, is the right number. But obviously, there's going to be some fluctuations when you have payables that come and go. You're either, you might be paying down more on your line of credit in certain months. But essentially, he said $35 million is a great baseline to think of moving forward for how many Bitcoin they might have to sell to cover their operating expenses. Obviously, as CleanSpark grows their monthly production, they're going to have to sell a smaller percentage of their monthly production to pay these operating expenses. But also, as the price of Bitcoin continues to appreciate, that also means they're going to have to sell a smaller portion of their monthly production. And that's more Bitcoin at the end of the day that they can add to their total balance. Now, the reason that's a big deal is because of what CleanSpark is doing with their total balance. To my knowledge, they're the only company, they're kind of the pioneer, I guess you could say, when it comes to this, where they are actively working on earning a yield on their total balance. And I'll just walk you through this. Gary Vecchiarelli mentioned this in the earnings call. He used Bitcoin at the time that was trading at around $101,000. And he said if they were to issue covered calls at the money, so with a strike price of $101,000 just 1 week out in the future, they'd earn a premium of over $2,400 or 2.4%, which annualized is 97% return. That is insane. Now, he clarifies this and says that they would never put their entire Bitcoin balance at risk at the money. But at least for now, while the company is dead set on selling a portion of their Bitcoin mining production and they forecast their OpEx needs for the month, well, they know ahead of time how much money they're going to have to raise via selling Bitcoin. So why not sell some covered calls? If they get exercised, oh well, they get exercised at somewhat of, you still keep that premium and you're going to sell your Bitcoin anyway. If they don't get exercised, that's just extra premium at the end of the day that goes straight to the bottom line for shareholders. It's an actual flywheel effect where then they can take that premium. And he talks about it here. They can sell less production if they earn more premium on these covered calls, or they can pay down debt, or they can roll it into other instruments, or maybe even they can roll it back into buying Bitcoin, which is what they would do in this scenario with Bitmain if Bitcoin rises above $110,000 per coin. So it's very, very interesting the things that are going on right now. They're going to lead to a lot of value creation for shareholders. So let me take you to my CleanSpark fair value spreadsheet. This is made available to all my paid monthly members. I've also posted all of the Wall Street analyst research reports to my members in the Discord server. It's the cheapest membership on YouTube, like $5 a month, the price of a cup of coffee. If you want to support me, I'm entirely self-funded and independent, so your support means a lot to me. just hit the Patreon link in the pinned comment down below, or hit the join button located right next to the subscribe button if you're on a computer. You won't see that option if you're on a mobile phone or an iPad or something like that. You'll just go ahead and click that Patreon link or Google it, and it'll pop up for you. Now, Gary, the CFO, basically said that their goal longer term is to earn between 4 and 6% on their total HODL balance every single year. That is not going to be the case this year in 2025. It's probably not going to be the case next year in 2026. But in 2027, a couple years down the line, a few years down the line, really, this is when this could get really exciting. So if we go ahead and change this yield to 4%, based on the fact that CleanSpark, I think CleanSpark is going to continue to sell monthly production to pay for operating expenses indefinitely. I don't think they'll ever go back to 100% HODL strategy. Obviously, I could be wrong, but taking that into consideration, I have CleanSpark hitting 20,000 Bitcoin on their balance sheet by 2027, which at a 4% yield, if the price of Bitcoin's just hovering around $100,000 still 3 years down the line, which I think a lot of you would say is unlikely, that is still an additional $80 million going to the bottom line for shareholders. That is difference-making money that other companies, again, don't have access to if they don't have a HODL balance. So it's not even the fact that Bitcoin opens the door for non-dilutive financing. It's the fact that, well, moving forward, we're going to be able to start to earn a yield on our HODL balance. Now, if we up this to a 5% yield at $100,000 for Bitcoin, that's $110 million of additional 100% margin income going to the bottom line for shareholders. 6%, you get up to $132 million. And of course, you can go down and change your Bitcoin price. So you think Bitcoin's going to be at $200,000 in 2027. Well, all of a sudden, you're looking at $240 million of 100% margin net income, a net income boost for shareholders in 2027. It's going to make a huge, huge difference. Now, this page in the spreadsheet shows you CleanSpark's actual Q2 numbers, which their fiscal year doesn't exactly align with the calendar year. That's why Q2 for them is January through March. It's kind of counterintuitive, a little bit confusing, but that's just the way things are. These are their actual results that I've inputted here. I just want to highlight a few things. Their cost of revenue was quite a bit higher than I had forecasted. And this was mainly because of increases in energy prices during the record cold months of January and February. And they were still implementing software to support a lower blockchain-specific tariff in Wyoming. Moving forward, we know that CleanSpark is heavily focused on immersion cooling in the states of Wyoming and Tennessee. Those are kind of the areas, the states where they see a lot of their growth moving forward. So those two items really inflated their energy prices during the quarter. But the management team reminded us that they no longer, like all these other companies are, they don't operate to an energy cost per kilowatt hour. They operate to a bottom line margin, which makes a lot more sense. You know, their average price per kilowatt hour, I think, was around 6 cents during this quarter, but they still were able to operate at 6 cents per kilowatt hour while boosting their bottom line numbers. So it just makes sense to stay operational in time periods like that. However, there are a few items here that were better than I had forecasted. Their professional fees were lower than I anticipated. Their payroll was lower than I anticipated. Their SG&A was lower than I anticipated. And all three of these items fell. So CleanSpark is controlling their controllables when it comes to direct expenses, indirect expenses. They're kind of topping out, I think, when it comes to these professional fees and payroll and SG&A. I think moving forward, again, they want to operate like the adult in the room, and that's exactly what they're doing. So their costs moving forward are going to be relatively flat, which again is why they say they've reached escape velocity, because at this point moving forward, they'll be able to demonstrate increasing operating leverage as time goes on. They mine more Bitcoin and the price of Bitcoin continues to appreciate. This, I don't think the markets see at all right now. It's something that, just based on the history with Bitcoin mining companies, it's really hard to buy into this right now because we haven't seen it yet. But I'm telling you, when CleanSpark starts to demonstrate this, Wall Street investors all over, when CleanSpark proves themselves, they're going to come flooding into CleanSpark stock. And don't kid yourself. People talk about how volatile Bitcoin mining stocks have been historically, but by focusing on earning a HODL yield, for example, by focusing on non-dilutive financing, for example, CleanSpark is finding ways to protect their business in the event that hash prices drop, that their profitability drops. They're finding ways to hedge their business and make it more stable and predictable and less risky. So I think the days of CleanSpark stock falling 90% in 12 months are more than likely over. And I know that sounds crazy to a lot of people right now, but I really feel that time is going to demonstrate that. Unless, of course, Bitcoin really truly goes to zero. But at this point in time, it seems like Bitcoin is too big to fail. There's too many powerful dollars going into it. It's too big at this point to fail and go to literally $0 per Bitcoin. And we always have to remember the network, first and foremost, is designed in a way to ensure that it's profitable for enough compute to be online to keep the network secure. Because if the network's not secure, Bitcoin itself fails. So first and foremost, Bitcoin miners have to be profitable. And unfortunately, I don't think Satoshi was ready for a lot of the Bitcoin miners to be public entities where they can just go out and sell additional shares into the markets to raise more money and be artificially profitable or cash flow positive. I think that has had some negative consequences for Bitcoin mining companies. But again, as a lot of that hash rate comes offline and more focus is put on HPC AI, a lot of that's going to reverse, and a lot of it already is reversing, and it's benefiting CleanSpark. Now, during the quarter, a little bit disappointing, they still did have a loss from operations of around $10 million. I've long said that $100,000 per Bitcoin is kind of that point where they reach profitability from an operational standpoint, and anything above $100,000 per Bitcoin just benefits them even more. Again, operating leverage. During this quarter that they reported on, the average Bitcoin price was $92,811. Obviously, $7,000 below what I believe is their the point of no return, I guess, of $100,000 per Bitcoin. Due to their loss on the fair value of Bitcoin, which, this is going to be reversed next quarter. This is kind of silly, but it does factor into net income. It's going to hurt companies just on headline numbers during quarters where Bitcoin ends lower than it started, but it's going to help companies in quarters where it does the opposite, where it ends higher than it started. Q3 for CleanSpark is going to be a quarter where they'll have a significant gain on the fair value of the Bitcoin sitting on their balance sheet. They're going to deliver insane net incomes, at least the way things are looking right now. Obviously, Bitcoin's volatile. It can fall just overnight if it wants to, really. But again, I think Bitcoin's volatility is also fading a little bit as we get further along the learning curve, as as the bad actors have now been exposed. As we've learned from those bad actors, they're less likely to happen again. I think the overall, at least the downside volatility of Bitcoin is more limited than it ever has been before, making investing in a company like CleanSpark even more attractive. Moving to my personal fair value for CleanSpark right now, this is just taking into consideration today's dynamics. So today, I think based on today's operational numbers, the fair value for CleanSpark is $17.22, meaning the stock is undervalued by 76%. Now, you can download the spreadsheet if you remember and change my numbers. Say you think by the end of the year, Bitcoin's going to hit $125,000. CleanSpark, they're going to have 14,000 Bitcoin sitting on their balance sheet. Their hash rate is going to reach, let's say that 57 exahash per second figure. Network hash rate, we'll just say it reaches 950. You can change my numbers here and you'll see my price target goes up to $23.68, which would make CleanSpark undervalued by 140%. So depending on what inputs you're looking at, I prefer just using today's inputs because I know based on today's dynamics, this is what I would pay for the company today, not even considering any of the potential growth in the price of Bitcoin or the potential growth of CleanSpark's business. Not considering any of that, I think the fair value of CleanSpark today is around that $17, $18 level. That's what I would pay for the business today if they had static operations, zero growth. So that's what I prefer to look at. But anyways, I hope this video helps out what I'm thinking with CleanSpark. Honestly, I prefer that the markets don't fully understand what's going on with the company, because I think that's what opens the door for opportunity. And when there's opportunity, that's when I like to take advantage of things like this. So it's been a little while since I've actually purchased CleanSpark stock. If we stay in this single digit range, don't be surprised if I come out and send out a buy alert for members buying a fairly large lot of shares very, very soon. So stay tuned for that. No promises, kind of depends what the market does. But man, super confident, super optimistic in the future of CleanSpark. Not a whole lot else to say for this video. I hope you guys enjoyed. If you're new here, returning, not yet subscribed, please subscribe down below. Stay blessed, keep 10 toes to the ground and your chin up. Have a great rest of your day. Peace out.